What's going on, everybody? This is Jack with the Trading Tribe. Excited to share with you another tip today on how to actually get a little bit better at your chart reading. And today we're going to be focusing on how to spot supply levels in the market. This is a really unique way to attack a downtrend, and as a day trader, I use this almost every day to spot areas in the market that would be safe to short. So regardless of what you're trading, this should really help. Feel free to like and subscribe to the channel for more videos just like this. Super excited for some of the content coming out here in the near future. But for now, you can tune in and hopefully you gain a lot of value from this video. For today, we're going to be looking at natural gas again. This is my bread and butter, so this is typically the instrument I'm trading every day, but the lesson we're about to go through really applies regardless of the market you're looking at. And typically when a market is in a downtrend or is moving down with momentum, we like to try to find what we call supply zones, which essentially can help you find out where to short and safe areas where other people are shorting as well. And if we think about it, right, if a market is trending down, there's certain places that are the safest to short. And that's essentially what a supply zone is. It's when there's more supply than demand. And essentially that will cause that market to drop. So in this example, right, this was a downtrending day, and there's a few ways to actually spot a supply zone. What I like to typically do is have VWAP on our chart. So in this case, VWAP is this middle white line, and this is just the volume weighted average price. And I am a day trader, so this is the VWAP for this current day, which ended up being the 7th of November in 2022. And in this case, right, for a supply zone, what we typically like to find is a floor in the market. So if we look at around midnight, right, there was a floor right around this level. And let me zoom in real quickly. And let me bring on our price level. So right around 6.71, right, there was a floor, and essentially the market broke that floor. And typically for a downtrend, right, when a floor is broken, that level typically turns into the new ceiling. So you'll notice price came back up and actually failed at that level, and then price came back up, failed at that level. And we'll notice here, right, this was a really strong area because it was also VWAP. So that's what we like to call a confluence, when multiple things line up to help you take a trade. And essentially if they agree, that's even more of a reason to be confident in that trade. So in this case, right, this was kind of the first supply zone that I noticed when I woke up. Obviously, I was not up at midnight, so these are things that can even be valuable after the fact, but just a good thing to look at on a given chart when determining what the trend is. In this case, right, there was a new zone kind of printed on the chart. So we'll notice, right, the new floor was right here. So I like to mark that out, and we'll notice this is kind of the new supply zone. Just like this was the floor, once that floor is broken, typically we like to wait until the new floor is put on the chart. And at that point in time, it was right about here. And we'll notice, right, price did break that again. And then after a long kind of grind lower, there was kind of a major breakout move after breaking that level. But at the end of the day, right, it came back to VWAP and came back to that supply zone. And sure enough, right, came back to this area. This is actually the trade I took on this day, and it failed immediately, right, all the way down to, this was a major move. If we even chart this move, in futures, everything moves based on ticks. So if I use my drawing tool on Thinkorswim, we can see just right here, right, this was a $1,700 move almost in just about an hour. So super powerful to see how some of these supply zones can work and how quickly price will really react off of those levels. If we continue charting, right, we can find that there were lows kind of printed again. So we had new lows kind of forming. And for supply zones, when a low is hit twice, that essentially strengthens the level. So obviously this low was only hit once. This low was only hit once. But we'll notice, right, this low was hit once here and then was hit again here, and it actually bounced again. So not only could you have shorted again right here for another massive move down, but this zone was even stronger. So supply zones can also get stronger over time. And in this case, right, there was another break of that supply zone, and it came back very close to that zone, and sure enough, failed again. And then we can extrapolate this on and on, right? Even if we just do the next level, right, there was a new low, that low was broken, that turned into the ceiling multiple times. So just like that, right, even on just this given day, there were 5 to 10 trades presented just with this supply and demand strategy, right? And because price is going down, all we're really looking for is those supply zones, right? Demand zones don't really matter because we're not looking to buy, right? We're always trying to go with the trend in our group. So hopefully this is really valuable. And one of the things to point out is we do want to be careful with these levels, and how they typically work if you want to structure a trade off of the level is you typically want to enter near the level with a stop loss above the level. Because if you think about it, right, this level really shouldn't break by much. Sometimes price will be a little volatile and break through a tiny bit, and that's what a stop loss is for, right? Even if you took a loss on this trade because of it poking through quite a bit, we did have multiple where it never got past the level. So they're not 100% all of the time, but something to keep in mind where you want to actually short near that level with that stop loss above the level. And then the best part about taking a supply trade is you have a target, right? So in this case, right when price came up to the level, we maybe got in here with a stop loss up here, let's just say, and our target can be that level, right? Because at the end of the day, we want it going all the way down to that level. So not only will you have really good risk to reward, but you're going to have a really clear area to get in, as well as a really clear risk area for where the price should not go. So hopefully this helps a ton. I know it helped me a lot with when trading trends, and hopefully this shows up quite a bit when you're actually trading so you can implement this with your own strategies. Thank you so much everybody for tuning in. Feel free to like and subscribe for more of this, and we'll talk next time.